Hey everyone, and a massive, energetic welcome back to Eco Elf Lab.
It's good to be diving back in.
Keeping up in the crypto world feels like trying to catch lightning in a bottle. It's exhilarating, but man, it moves fast.
Definitely. It never slows down.
So we're down here on bended knee, figuratively speaking, of course, practically begging you
Uh-huh.
to lend us your brilliant attention for the next little while, maybe the length of your commute, or I don't know, while you're tackling that mountain of laundry.
Yeah, just carve out a few minutes for us.
Seriously, though, with the crypto landscape shifting as rapidly as it does, you genuinely won't want to miss the insights we've dug up for you today.
That's right. Trust us. Your future, slightly richer self might thank you.
Aha, exactly.
We've navigated the latest waves of information, and there are some really significant movements and developments that we think are, well, pretty crucial for you to understand.
All right, let's jump straight into what's been moving the markets then. It looks like last week saw a pretty significant chunk of change heading out of digital asset funds. A hefty $795 million in outflows. And leading that charge was Bitcoin, $751 million leaving the space.
Wow, that's substantial.
Yeah, but interestingly, XRP saw a slight positive blip with like $3.5 million in inflows,
Oh, okay.
which kind of highlights the overall cautious mood still hanging around most altcoins, wouldn't you say?
It really does. That divergence is quite telling, isn't it? While Bitcoin saw those big outflows, that little bit of money trickling into XRP, it makes you wonder.
Yeah, like is there some specific interest or expectation there, even with the broader altcoin market feeling a bit, sluggish?
It does raise some interesting questions. That small inflow into XRP could indicate maybe a localized optimism,
Right.
perhaps related to ongoing legal stuff or specific project updates.
Right.
Standing in contrast to the more generalized caution we're seeing elsewhere in the altcoin space.
And speaking of conviction, get a load of this. Metaplanet.
Ah, yes.
They are not shy about their Bitcoin bullishness. They just scooped up another 319 Bitcoin for $26.3 million,
Wow, adding to the pile.
bringing their total stash to a substantial 4,525 Bitcoin. And here's the kicker. They're now the largest publicly traded holder of Bitcoin in all of Asia.
That's a huge title, Asia's largest.
And they have this really ambitious goal of hitting 10,000 Bitcoin by the end of next year.
10,000 BTC.
Yeah.
That's a bold statement, right?
Totally.
Yeah.
What do you think is fueling this particular aggressive strategy from Metaplanet? Are there specific factors maybe in the Asian market that make Bitcoin more appealing to them right now?
That's a great question. Metaplanet's strategy likely reflects a confluence of factors specific to the Asian market.
Okay.
We might be seeing a stronger belief in Bitcoin as maybe a hedge against local economic uncertainties or, currency fluctuations.
Makes sense.
Additionally, there could be a more favorable regulatory environment, perhaps, or just a greater appetite for digital assets among institutional investors in that region.
Right.
Their stated goal of 10,000 BTC certainly underscores a very long-term strategic vision.
Absolutely. And you can't really talk about long-term Bitcoin believers without mentioning Michael Saylor and MicroStrategy.
Of course. The OGs of corporate Bitcoin buying.
He's basically been sounding the alarm that they are buying the dip, amidst reports of a massive $5 trillion stock sell-off.
5 trillion, wow.
Yeah, it really reinforces this idea that Bitcoin is being viewed by some as a safe harbor, a place to park value when traditional markets get a little choppy.
It's almost like a digital version of a flight to quality, wouldn't you say?
Exactly that.
Precisely. The continued accumulation by MicroStrategy, especially during a significant stock market downturn like that, it really strengthens the narrative of Bitcoin as a potential safe haven asset.
Yeah.
It suggests that some institutional players are viewing it as a diversifier, maybe uncorrelated with traditional market movements, and definitely a store of value during times of economic uncertainty.
Now, shifting to the individual investor side of things, this is fascinating. Andrew Kang from Mechanism Capital
Oh, yeah, I heard about this.
apparently doubled his Bitcoin long position to a whopping $200 million.
$200 million.
Wow. And his reasoning is tied to the Trump put theory and the potential for some easing of trade tensions acting as positive triggers.
Right, the macro factors.
It's intriguing how these big macro political factors are influencing even these very large individual investment decisions.
Kang's increased Bitcoin allocation is, well, a clear example of how geopolitical expectations can directly impact investment strategies in the crypto space.
Definitely.
The Trump put I mean, it refers to the idea that certain policies or potential outcomes associated with the Trump presidency could be seen as beneficial for risk assets, including crypto,
Okay,
particularly if they involve, say, a reduction in trade tensions that have been weighing on global markets.
gotcha. Okay, now brace yourself for a bit of a roller coaster story.
Oh,
The One Olive token from Mantra just experienced a dramatic nosedive, crashing an unbelievable 90% in just 90 minutes.
90% in 90 minutes.
Ooh, yeah. The team is attributing this to a forced liquidation on a centralized exchange and are strongly denying any insider selling.
Okay, a forced liquidation.
And to add to the drama, they even took their Telegram group offline while all this was happening.
Though that never looks good.
No, it's a stark reminder of the volatility that can still be present and really highlights the importance of understanding the risks involved.
Absolutely.
I mean, a forced liquidation on a CEX, that typically happens when a trader's margin position falls below a certain threshold, right?
Yeah.
And the exchange just automatically sells off their assets.
Exactly. To cover potential losses.
Mm.
That rapid and severe price drop of online is a critical illustration of the inherent risks in crypto trading, particularly with, let's say, less established altcoins.
Yeah.
The team's explanation of a forced liquidation does raise questions about, the size of the position and the potential impact of such events on market stability.
And taking the Telegram down?
Right. The decision to temporarily shut down their Telegram group likely just amplified investor anxiety and speculation during a period of, significant price volatility.
Right. So a good reminder to always do your homework out there. Okay, let's pivot a bit to the regulatory landscape.
Okay, important stuff.
Some important news coming out of Europe. Google is set to start enforcing the MiCA rules for crypto ads starting on April 23rd.
MiCA, okay.
Yeah, MiCA, by the way, is that new comprehensive regulatory framework for crypto assets in the EU. It's aiming to provide clarity and, consumer protection.
So what does this mean for advertisers?
It means that anyone wanting to advertise crypto services in Europe through Google will need to have the proper CASP or MiCA licenses.
Right, licenses.
And get the green light from Google. A CSP license, that's a crypto asset service provider license, it allows businesses to legally offer crypto-related services within the EU.
So a pretty significant step towards regulation in the European crypto space. Yeah, this move by Google to enforce MiCA regulations on crypto advertising is, I think, a significant step towards mainstreaming and legitimizing the crypto industry within Europe.
Makes sense.
It will likely lead to greater transparency and accountability in how crypto assets are promoted, potentially increasing consumer confidence, and maybe attracting more traditional businesses to the space.
And speaking of interesting connections, check this out. World Liberty Financial, which reportedly has some ties to Trump, recently purchased $775,000 worth of SEI.
SEI. Interesting.
Adding to their collection of altcoins. And wouldn't you know it, SEI saw a pretty nice price jump, 27% this past week.
27%. Nice timing for them.
Yeah, it's currently trading around 0.178 cents. It always catches your eye when you see figures with connections to traditional finance or politics making moves in the crypto markets.
It certainly adds another layer to the ongoing convergence of traditional finance and the digital asset space, doesn't it?
It really does.
The involvement of entities like World Liberty Financial with reported political connections, it highlights the increasing recognition and maybe adoption of cryptocurrencies beyond just the purely tech-focused early adopters.
Yeah.
The subsequent price movement in EA, it could be a reflection of market sentiment reacting to this news, or it could just be coincidental market dynamics. Hard to say for sure.
True. Okay, on the technology front, we're seeing the SOL-ETH ratio hit an all-time high.
Ah, the SOL-ETH ratio. Always an interesting one.
Now, what does that practically mean for investors or the overall health of these two ecosystems? How would you explain that?
Well, think of Solana and Ethereum as two major highways for crypto transactions, right?
Okay, good analogy.
A high SOL-ETH ratio is like saying that right now the market perceives the Solana highway as being maybe less congested and potentially faster or more efficient than the Ethereum highway.
So Solana is looking better relative to Ether.
Exactly. It essentially means that the market currently values Solana more highly relative to Ethereum than it ever has before.
There's always a but.
Yeah. Don't count Ethereum out just yet, because Vitalik Buterin himself has hinted at the possibility of faster upgrades coming after the Pectra upgrade in May.
Oh, interesting. Faster upgrades.
Yeah, which could be a significant catalyst to watch for ETH.
Okay, definitely something to keep an eye on.
That's a helpful analogy, the highway one. The Solith ratio is indeed a key indicator of market sentiment and the perceived momentum behind these two leading blockchain platforms.
Right.
And Vitalik's hint, or mention, of accelerated upgrades post-Spectra, it offers a potential roadmap for Ethereum to address some of the challenges related to, scalability and transaction costs.
And that could definitely impact its future market performance.
It certainly could.
Now, despite all these individual events and market fluctuations, it's interesting to note that NYDI is actually suggesting that overall crypto markets have remained relatively orderly.
Huh. Orderly. Even with all the tariff talk.
Yeah, even with all the talk of chaotic tariffs being thrown around. They specifically pointed to Bitcoin's resilience and surprisingly low volatility in this context.
That almost feels counterintuitive with all the headlines, doesn't it?
It really does.
It does highlight a potential maturation of the market, maybe. NYDIG's observation suggests that the crypto ecosystem might be developing a greater capacity to absorb and process macroeconomic and geopolitical news without the extreme volatility we've seen, in the past. Bitcoin's relative stability in the face of tariff-related uncertainty could indicate a growing perception of it as a more established and resilient asset.
But it's not all smooth sailing, is it? We also got a stark reminder of the importance of playing by the rules in this space.
Ah, yes. The tax man cometh.
Haha, indeed. An NFT trader pleaded guilty to underreporting a massive $13 million in profits from trading CryptoPunks.
$13 million, wow.
And is now facing up to 6 years in prison for tax fraud. It's a serious wake-up call that the same financial regulations apply to crypto gains.
Absolutely. This case serves as a critical reminder that tax obligations extend to cryptocurrency and NFT trading profits. You can't just ignore it.
Yep.
The potential consequences of non-compliance are significant and underscore the need for individuals to accurately report their earnings and adhere to relevant financial regulations.
Seriously. Okay, now let's try to connect some of these threads, especially, building on our past conversations here on EcoWealth Lab.
Okay, let's tie it together.
We've previously discussed the increasing intersection of traditional finance with the crypto world, right?
Many times, it's a huge theme.
Well, it seems BlackRock's move to expand its tokenized money market fund, BUIDL, onto Solana is a direct continuation of that trend.
BlackRock and BUIDL on Solana. Yeah, that's big news.
This fund, which had a significant $1.7 billion in assets at the time of this expansion,
Dillion with a B?
is now available on its 7th blockchain, Solana. This could really inject even more institutional interest into Solana and the whole narrative around tokenized real-world assets, or RWAs.
Exactly. BlackRock, a major player in traditional asset management, extending its tokenized money market fund to Solana is a significant validation, both for tokenization as a concept and, frankly, for the Solana blockchain itself.
A good point.
By offering this exposure to tokenized real-world assets on another prominent network, they are broadening accessibility for investors and further bridging that gap between traditional finance and the crypto ecosystem.
And thinking back to those Trump tariffs we mentioned earlier.
Right, the tariff pause.
Research actually suggests that Bitcoin's over 8% surge up to around $81,700 was likely a pretty direct reaction to Trump announcing that 90-day pause on tariffs.
So a direct cause and effect, possibly.
It seems like it really helped calm some market anxieties. And it wasn't just Bitcoin. Ethereum and XRP also saw gains of over 12% following that news.
Wow, over 12% for ETH and XRP too.
Yeah, it really underscores how closely these global economic policies are now tied to the crypto markets.
That immediate and positive correlation highlights the increasing sensitivity of the cryptocurrency market to macroeconomic announcements and, geopolitical developments.
Definitely.
It reinforces the idea that these digital assets are operating within a broader global economic context and are influenced by factors beyond just their internal tech advancement.
And on the tech side, remember our discussion about the importance of different blockchains being able to, communicate and work together more seamlessly. Interoperability.
Oh yeah, interoperability is key.
Well, Whale.io just launched its NFT bridge, and this is a pretty significant step in that direction.
An NFT bridge from Whale.io.
Okay. It's designed to enhance exactly that, the ability for NFTs to move more freely between different blockchain networks.
Which could be a real unlock for NFT investors, potentially increasing liquidity and making these digital assets more accessible across the entire Web3 landscape.
Exactly. More movement, more access.
Yeah, Whale.io's NFT bridge directly addresses the issue of fragmentation within the NFT ecosystem. By enabling easier transferability of NFTs between different blockchains, it has the potential to create a more unified and liquid market,
Right.
allowing investors greater flexibility and access to a wider range of digital assets.
So when you look at the bigger picture, what really stands out is how interconnected everything is becoming.
It really is a web.
You've got these global political and economic forces at play, the increasing involvement of major financial institutions, and these really crucial technological developments all constantly interacting and shaping the crypto world.
That's a perfect summary. The crypto market is no longer an isolated entity, if it ever truly was.
Yeah.
It's increasingly intertwined with traditional finance, global economics, and technological innovation.
Yeah.
Understanding these interconnections is really key to navigating this evolving landscape.
It really does make you think about the bigger picture. With this increasing institutional involvement and the growing influence of global economic events, how might traditional investment strategies need to fundamentally evolve to incorporate this increasingly crypto-native world? It's definitely something worth pondering.
Indeed. The integration of digital assets into the broader financial landscape is likely to continue, prompting investors and financial institutions alike to adapt their strategies and perspectives. It's a fascinating space to watch.
Well, there you have it. Another deep dive into the dynamic world of crypto.
Always something new.
We sincerely hope you found these insights valuable and thought-provoking. As always, keep exploring, keep learning, and definitely keep those questions coming our way.
Yeah, engage with us.
And don't forget to follow EcoWealth Lab for more of these deep dives. Until next time.